Gold is approaching a critical liquidity zone, and smart money is actively preparing for the next massive drop. My primary focus today is a potential sell setup targeting the 3968 liquidity pool. But there's one specific manipulative condition that absolutely must happen first. Most retail traders, they're staring at the completely wrong levels right now. So let me show you exactly where institutions are pointing their crosshairs today so you can position yourself before the next major displacement.
Our directional bias right now is overwhelmingly bearish. We have a crystal clear structural draw on price, and the ultimate outcome we're hunting is an aggressive push to new lows, specifically attacking that massive 3968 sell-side liquidity pool. But here's the catch. Timing is literally everything here. We aren't just selling blindly, we're waiting for the market to walk right into our trap.
Look at the steep, bearish displacement we're getting right now. This clearly reveals that institutions are actively distributing shorts and just driving price lower through discount arrays. This isn't random market noise, guys. Every minor rally is being met with heavy selling pressure. The institutional footprint is absolutely undeniable. Large entities are actively engineering liquidity just to fill more of their sell orders.
So, what's the actual master plan for today? Well, keeping that heavy bearish bias, we're looking to enter premium supply specifically between 4012 and 4016, with our crosshairs locked firmly on that 3968 floor. The absolute most crucial takeaway here is that we are not selling at current prices. No way. We need price to trade up into a premium level. We want to sell at institutional wholesale prices, definitely not retail prices. What's really fascinating here is how perfectly the 4-hour and 1-hour timeframes synchronize. It's textbook. We've got a series of lower highs and open fair value gaps that are completely controlling the downward delivery. These gaps act like giant magnets. Smart money uses these exact zones to defend their short positions, keeping the order flow firmly in their grip. Every push up into these gaps becomes a high probability chance for us to join that dominant trend. Let me be incredibly clear about what we are aiming for. There is a highly vulnerable sell-side liquidity pool resting cleanly beneath the relative equal lows around 3970. This specific liquidity pool changes everything. Retail traders have stacked their stop losses just below those lows, convinced it's strong support. But for smart money, those stops are the exact fuel they need to cash out their massive short positions. But here's the problem most retail traders are walking into today. They are completely ignoring tonight's high-impact U.S. consumer sentiment data. Make no mistake, institutions will use this news to engineer a massive liquidity sweep. The market is flashing a major warning signal right now. You simply cannot trade this setup blindly. Institutions require massive volume to execute, and these scheduled economic releases provide the perfect injection of volatility to manipulate price and raid those stops.
And just look at the broader macro backdrop we're dealing with. We've got a 63.4% probability of a Fed rate hike, and PCE inflation just spiked to 4.1% thanks to Middle East oil shocks. This macroeconomic narrative impartially supports extreme dollar strength and, by extension, further gold distribution. It's basically a perfect storm, where the fundamental data seamlessly aligns with our technical bearish order flow. A strong dollar inherently crushes gold lower. Zooming into the 15-minute time frame, we have a pristine bearish order block sitting right between 4012 and 4016. But notice how smart money confirmation to enter has not actually appeared at current levels. We're sitting in a deep discount right now. If you click sell here, you're just chasing the market. We absolutely need to see price retrace back up into this 15-minute zone to prove that institutions are actually ready to defend their premium supply. So here is the absolute most critical part of this explainer. You have to follow a strict 3-step execution model. First, wait for the manipulative retracement to 4012. Second, spot the M15 downward displacement candle. And third, only then do you execute the sell. This is exactly how you trade like an institution. You let retail get chopped up in the noise, and you strike only when the algorithm presents a clear, time-based shift in momentum inside our kill zone.
Bringing this all together, here are the exact parameters for our executable sell plan. We're looking at a massive 1 to 3.5 risk to reward ratio, with a stop loss safely tucked away above 4026. If the confirmation triggers, you're entering inside that 4012 to 4016 window. Your first take profit sits at 39.95 to secure capital, and then, this is the fun part, you leave a runner open to aggressively target that ultimate 3968 external liquidity pool. Now this is the scenario most traders are completely ignoring right now.
Retail is aggressively selling the local discount as we speak, but smart money is just patiently waiting for a pre-news premium spike to trap those early shorts before finally collapsing the market. This is exactly where the trap gets set. Traders see downward momentum, they panic sell the absolute bottom, and then a sudden 15-minute spike stops them out just moments before the real drop happens. Do not fall for it.
Let's do a quick final recap to lock in our trading discipline for this setup. We are staying strictly bearish. We are waiting for the New York kill zone premium sweep. And crucially, remember that any aggressive 4-hour close above 40.45 completely invalidates this entire setup. That invalidation level is your shield. If price closes above 40.45, the institutional narrative has officially flipped bullish and you just walk away. Your risk management is always your ultimate edge.
If you enjoy this kind of institutional-style market analysis using ICT and smart money concepts, consider subscribing to ICT Market Theory. And if you'd like to trade alongside these setups, you can find the FXTM account link in the pinned comment below. So, I'll leave you with this question. Are you going to be the liquidity today, or are you going to patiently wait and trade alongside smart money? The choice is entirely yours.